Prometric Arizona license exam terms. Person. Term meaning the individual or an insurer, association, organization, society, partnership, business trust, corporation and entity, etc. Avoidance. Eliminating exposure to a loss. Peril. Cause of loss insured against in an insurance policy. E.G. Life insures against death. Health insures against medical expenses. Property insures against loss of property, etc. Morale hazards. Arise from a state of mind that causes indifference to loss, such as carelessness. Adverse selection. Insuring of risks more prone to losses than the average risk. Agent/producer. A legal representative of an insurance company. The classification of producer usually includes agents and brokers. Agents are the agents of the insurer, not catastrophic. Insurers need to be reasonably certain their losses will not exceed specific limits. Insurance policy. A contract between a policy owner and/or insured and an insurance company which agrees to pay the insured or the beneficiary for loss caused by specific events. Insurer, principal. The company who issues an insurance policy. Premium. The money paid to the insurance company for the insurance policy. Randomly selected and large loss exposure. There must be a sufficiently large pool of the insured that represents a random selection of risks in terms of age, gender, occupation, health and economic status, and geographic location. Reciprocity/reciprocal. A mutual interchange of rights and privileges. Retention. Planned assumption of risk by an insured through the use of deductibles, copayments, or self-insurance. The purpose of retention is 1. To reduce expenses and improve cash flow. 2. To increase control of claim reserving and claim settlements, and 3. To fund for losses that cannot be insured. Policy owner. The person entitled to exercise the rights and privileges in the policy. Due to chance. A loss that is outside the insured's control. Risk, speculative. Involves the opportunity for either loss or gain. An example of speculative risk is gambling. These types of risks are not insurable. Property insurance. Insures against the loss of physical property or the loss of its income-producing abilities. Sharing. A method of dealing with risk for a group of individual persons or businesses with the same or similar exposure to loss who share the losses that occur within that group. Definite and measurable. A loss that is specific as to the cause, time, place and amount. An insurer must be able to determine how much the benefit will be and when it becomes payable. Reduction. An attempt to lessen the possibility or severity of a loss, like getting a physical to detect health problems early on, installing smoke detectors, etc. Casualty insurance. Insures against the loss and/or damage of property and resulting liabilities. Exposure. A unit of measurement used to determine rates charged for insurance coverage. A large hashtag of units having the same or similar exposure to loss are referred to as homogeneous. The basis of insurance is sharing risk between a large homogeneous group with similar exposure to loss. Statistically predictable. Insurers must be able to estimate the average frequency and severity of future losses and set appropriate premium rates. Transfer. Risk can be handled by transferring it so that the loss is borne by another party. Insurance is the most common method of transferring risk from an individual or group to an insurance company. Risk, pure. Pure risk refers to situations that can only result in a loss or no change. There is no opportunity for financial gain. Pure risk is the only type of risk that insurance companies are willing to accept. Broker. An insurer-producer not appointed by an insurer and is deemed to represent the client. Insurance. Transfers the risk of loss from an individual or business entity to an insurance company, which in turn spreads the costs of unexpected losses to many individuals. Loss. Defined as the reduction, decrease or disappearance of value of the person or property insured in a policy, applicant, or proposed insured. A person applying for insurance. Physical hazards. Are individual characteristics that increase the chances of the cause of loss, e.g. medical history, or birth condition like blindness etc., insured. The person covered by the insurance policy. This person may or may not be the policy owner.